All right, so here's a trade I took this morning. I posted it on the Discord community. For all those that are Discord members, you saw this trade that I posted. This was a like a 42 point NASDAQ trade. I was scalping here on the NASDAQ futures. So you can see the market's running to the upside. That's my target area around 170. And I did bring it down slightly a little bit after looking back at my 60 range and look at the higher base chart. But I'm in this trade because of the higher base demand zone, especially off the 120 range. I saw we tap into a demand zone there. And, you know, when the market taps into a zone like that, you've got to expect something to happen, especially when you're getting multiple confluences from multiple charts. So like the 120, the 60 range down to the 24 range. So I started seeing where there was multiple areas of confluence being in the demand zones to where, okay, the market could definitely react and push higher. So, you know, going back in between those charts is something that I talk about in many videos. The more confluence you have, the more the trade is going to work out, or it should work out more so in your favor. The thing about it is once you're into a trade, it's all about controlling the trade, knowing and looking at your higher base chart where it can go to. All right, so I'm going to go into explanation more about, okay, so as you see, I closed the trade out just a little bit earlier there, but it was a nice trade back to the upside off of the 120. This was that demand area, and then I scaled down. So let's talk about the trade, what I was looking for, what was going on in the charts, what was happening with market structure, what was going on with price action, and so you get a further understanding or a better understanding why I took this entry. Welcome back to the channel, everyone. Thank you for tuning in. We are looking here at the NASDAQ futures. Yes, the NASDAQ 100. And I took a trade this morning and I posted over on the Discord community for all those that are members and are part of our community. If you're interested in joining, the link is down in the description portion of the video. All you have to do is click on it. It is free to join the Discord if you're interested. Again, we're looking here at the NASDAQ futures, and like always, I am a scalper, so I like scalping the future markets. It doesn't matter if it's the NASDAQ, the E-mini, S&P 500. If you are a micro futures trader, just as well, you know, welcome to the community. Doesn't matter what future market you actually trade, because the way and the style of how I trade surrounds supply and demand, and I scalp when the market reaches a particular area. And one thing that I am personal goal for myself, I created for myself this year, was working on holding my trades so that I don't have to take as many. All right. If I can get in one good trade, like I took today, it was a 42 point scalp, or I believe, and I posted that entry over on the Discord. But you know, sometimes I may have to end up taking 2, 3, depends on how the market's moving and in reference to price action. But the overall thing that all traders need to understand, this is what's going to take your trading to the next level really, is if you know how to read the market. And you have to simply be able to master and read the market by understanding market structure. So if you're interested in understanding scalping and specifically how I trade and using the strategy how I trade, I always in my videos talk about confluence. Confluency is where it's at. The more confluence you have, the higher the chance of the trade working out, the higher the probability you're going to have. So I'm just going to show you an example today, what I was looking at in reference to the movement of the market. Yes, you know, we are in a range and we're looking for the market to kind of break out of this range. This is a 120 range chart. I typically trade you know, and look at 60 range, 120 range when I'm looking further out, a 24 range, a 12 range. So I'm using range charts. I don't trade time based or tick or volume based, and I don't know which of those charts styles are comparable in reference to, you know, a lot of people always ask me, hey Mike, what's a 5-minute chart in comparison to, you know, maybe a range based chart you trade? You know, which ones, you know, are kind of similar. I don't know that, you know. So if you trade time-based, tick-based, or volume charts, you're going to have to find your kind of sweet spot and what charts to use, okay? Because there's supply and demand. When I say this, it's universal. So you're going to see setups all over the chart. The key to trading is figuring out the overall direction of the market and making sure that when you are trading, that if I'm looking to take a trade, I want to make sure, say if I'm going short, I want to make sure that I'm not taking a trade going short into a area of, you know, demand, all right, below, especially on a higher base chart. So if I'm scalping from a lower base chart, okay? And I am, say, counter trend trading. If you do that, I'm not recommending counter trend trading until you gather some more experience. But I'm not here to tell anyone how to trade. But if you are taking a trade against the grain, against the market direction, meaning the market is bullish, and you're looking to take a short scalp at an area of supply and scalping it down, be very careful of what's below you. Is there a demand area off of a higher base chart? Okay. And the same thing in reverse. If you're looking to go long from an area of demand and you move down to a lower base chart and say, oh, I see this beautiful demand setup, but there is an area of supply off of a higher base chart, do not trade into a roadblock. Do not trade into, where there's a barrier resting it, because if you do that, the market's going to quickly turn around, because the higher base charts have more power than a lower base chart, if I say it like that. Okay, so let's take a look here. I'm looking at the what took place here on my 120 range chart. So the market is bullish, as you can see. We've been breaking structure to the upside, of course, but then the market broke lower here. All right, and this was on the 7th, which was 2 days ago, so that would have been Tuesday price action. So it started breaking structure to the downside, not actually on the actual 7th. I think it was early. Let's see, it was before the market opened on yesterday. Okay, and I didn't do any trading yesterday, I was busy, but the market broke below this area of structure right here. Okay, so I have it marked as a minor area structure. So when it broke below on the higher base chart, you have to understand that even though we haven't broke through a major area structure yet, you have to understand, even if it breaks to the downside on a higher base chart, then you have to understand that there's still opportunity to look for a short entry. Okay, now if anyone, or for all those that took this trade when the market pulled back to this supply area off of the 120 range chart, all right, when it pulls back to a major supply zone, okay, after breaking an area structure on a higher base chart, you have to think about, if it rejects that area, how powerful that move back to the downside is going to be. All right, even though we are bullish to the upside, okay, overall, because we haven't broke through a major area structure, but just slightly broke through an area of minor structure, then still there's opportunity to look for a short. Now, will the market come up here and break this area that's high up here? If it does, then that's going to be another, this is a major high right here to where the market would have broken structure to the upside. So because I didn't take a trade and saw this right here yesterday, I wasn't trading yesterday, but this is where the market started ranging it, even into the latter part of the day, to where the market was moving sideways, and even in today's session here. But what I did notice was this right here, was that we did, towards the close of yesterday, the market pushed down and pulled back. It broke structure a little bit to the downside. Broke structure, slightly breaking structure to the downside. Then it pulls back and breaks above this area. But then if you see, it turns back around and then it breaks back lower. So we actually ultimately broke through an area of structure below right here when we broke below this area at 138. So into today's session, what I saw was when the market broke back to the upside. Okay, now even within a range, this is where I talk about, people always ask, can you take trades within a range? If you know what you're doing and you know what's going on in reference to structure and it follows suit with price action. So the market broke back higher and it actually took out this area structure. When it broke above, if you want to say right here, this high right here at 93, okay, or 94, then we actually broke structure back to the downside, leaving this area of demand off of a higher base chart. Now you may be saying, well, there's a supply set up here, but a demand set up here within a range. Yeah, that is trading within a range. The market hasn't really shown full on, is it taking, I'm going to break structure back lower here, okay, after running back here, and then maybe break structure here. So maybe we get something that looks like this right here. So it made a run to the downside, pull back, okay, broke above this area right here, and then runs to the downside. Well, then we get a structure break below this area here at below at 73, 18,073. Or it could break back to the upside as it's ranging right now. So if you see what's going on right here, we actually pushed lower, we broke through area structure, but then we can break to the upside, and there's a structural break to the upside, meaning breaking through this high right here. But just make sure that when you are trading, that you're not trading in or against the grain of a higher base chart. Okay, whether it's, using a 60 and you're scaling down to a 12 range and you're looking to go short from a 12 range, zone, I mean, it's a 12 range supply area, but below you, you have a 60 range demand zone. Do not trade into or take counter trades when you have right below you an area, a blockade where the market is going to stop at. You know that something powerful is going to happen more likely if you're trading against the grain. So into a higher base chart, either supply or demand zone. So just follow suit and make sure that you're always looking at your higher base charts so that you don't find yourself getting stopped out and get into or setting yourself up into a bad trade. So what I saw this morning was that we had when we broke lower here, okay, we actually broke below this area here, then we broke back up, leaving this area of supply right here. So this was a structural break to the upside, even within this range right here, leaving this demand area. And then if you move down to even like your lower base charts, for example, I'm going to go ahead and put this on all charts so we can see on the 60 range. Okay, because that's a 120 range demand zone, all right? But even on a 60 range, you see we broke above this area right here. So we're breaking structure to the upside, but then it pulls back, okay? When it pulls back lower, I see what the market is looking as if it's trying to maybe possibly want to break below this low here, but it didn't. It turns back around. You get the break and close of the candle to the upside on the 60 range. But if we scale down to even, so we're holding strong at that demand area is what I'm talking about on the 120, okay? We haven't broke below it. Here, we pull down as if we're going to break below it, and then it turns back around. Okay, so we're holding strong still on the higher base chart. Okay, but then I look down to my, say my 12 range chart. Okay, I'm scaling, it's just scaling down pretty much. All right, and in this area, actually let's move down to a 24 range chart. So I'm moving from 120 to a 60 to a 24 range chart. So even on a 24 range chart, this is the 120 range higher base zone that we're still within. There's a demand area right here. So we're holding strong at the higher base chart, 120 range. We're moving down to the 60, seeing that the market's not breaking lower. On the 20 range or 24 range, there's a demand area here as well. So these are multiple confluences across multiple charts showing where the higher base zone is holding strong. We're at a higher time frame or higher base chart zone, so you've got to expect if the market reacts at the area to look for an opportunity. And in the strategy and how I trade, I like to see and move down to a lower base chart and look to see what the market is rejecting at. Once we get a rejection, then this is basically looking for a break and close of a candle to the opposite direction. But having multiple confluences from multiple charts, especially where, and using a higher base chart showing where the market is not breaking through a higher base chart, say in this case here, example, demand zone, then you have to understand that multiple confluences across many charts and the market is not breaking through that higher base chart zone and it's reacting as we move down to a lower base chart, meaning we're getting rejection, confirmation, break and close of the candle on a lower base chart, then what does that mean? That we're going to the upside. So if we look back at our higher base chart, you say, okay, well, if we get into a trade here, where could the market go back up to? Definitely back up towards the highs up here. There's nothing that's really going to, if you look at the higher base chart, there's no pretty much structure, okay, above us to where the market can actually stall out at until it gets back up here, okay, and starts filling in these imbalances back to the upside. So hopefully you have a better understanding of kind of what to look for in the sense of market direction, and making sure not to trade into an area of supply or demand from a lower time frame chart. So you don't want to trade into a higher time frame, supply or demand zone. Like again, taking a short into a demand area on a higher base chart, or taking a long into a area of supply off of a higher base chart. So just be mindful of that. What's above you, what's below you, because it can cause you, if you do not take the time to look at your higher base chart, it can cause you to take a bad entry, or a trade that can end up costing you significantly, okay? And you don't want that to happen. And then when you go back and take a look at it, that's the thing about it. We can always catch things in hindsight, but when it's in real time, you got to do your homework and be ahead. That's all I always talk about, always sizing up the market before getting into a trade. That means looking across multiple charts. What is below or above you before you take that entry? Is there something there that could block you? Like right here, I got to this demand area right here. There was nothing there. There was just some imbalances, some gaps that need to be filled back to the back, up to the upside on a higher base chart. So when I'm looking to get into a trade on going long on a lower base chart, hey, my clearance is clear. It's like being in an airspace and you're an aviator or air traffic controller, say for example, and they have to monitor these planes coming in and going out. They have to make sure those lanes, that area of space up there is clear for these guys to be taking off and coming back in when they're landing. Same thing when you're driving, traffic wise. You got to pay attention to the collision areas that are resting above and ahead is what I'm trying to say. So be careful out there. Be safe. When you're trading right now, we are ranging, and to me, I would be looking for either a break above here or break below. So are we going to continue breaking to the upside to continue the bullish direction to the upside, or we're going to start breaking to the downside? So if we break to the downside, I'm gonna say this here, then this is going to be a significant sign or an area that a telltale sign that the market is really trying to shift in a sense. We did break to this minor area, so typically when we start to see minor areas of structure being taken out, it could be a sign to where the market starts to set itself up to break lower. Okay, that's typically kind of the first sign. But then if we follow it up with another structure break to the downside, then you're going to know, all right, now the market is definitely trying to, or is definitely pushing lower. And so then you start to look for definitely short opportunities at areas of supply. So just want to share that with you guys. Hopefully that makes sense. Be safe in the markets. Today's Thursday. We still have another trading day to kind of round out the week. But that was all I wanted to share today, was just sharing the trade, explaining it. So hopefully it makes sense to you and breaking it down. So take care, trade safe. If you're not a current subscriber, please take the time to go ahead, click on that sub button, because there's lots of valuable content that I share here on the channel. And make sure to turn your post notifications on. You click on that bell to make sure you turn everything on so you never miss one of the uploads here on the channel. If you're interested in joining the Discord, again, the link is below in the description portion of the video. Or if you're interested in becoming an elite member, that description is below as well in the description portion of the video. That's all I have to share with you guys today. Hopefully you found some value in the content. If you did so, please drop a like on the video. I'll see everyone in the next one.